Question 1. Which of the following best describes a key difference between first-party and third-party coverage in cyber insurance policies? A. First-party coverage protects businesses from regulatory fines, while third-party coverage provides protection against business interruption. B. First-party coverage helps organizations recover from damage to their own systems, while third-party coverage protects against claims made by external entities. C. First-party coverage only covers damage from ransomware, while third-party coverage is limited to data breach incidents. D. First-party coverage applies only to large corporations, while third-party coverage applies to small and medium-sized businesses. Answer: B. First-party coverage helps organizations recover from damage to their own systems, while third-party coverage protects against claims made by external entities. Explanation: First-party coverage refers to protection for the insured's own assets, such as system damage, data loss, or business interruption caused by a cyber event. Examples include data breach coverage and cyber extortion coverage. Third-party coverage, on the other hand, protects against claims made by external parties, such as customers or business partners, for damages resulting from the insured's failure to secure data or networks. It includes privacy liability and network security liability. Option B accurately distinguishes between these two coverage types. Question 2. Scenario: Sarah runs a small online business and recently experienced a cyber attack that led to the theft of her customers' personal data. She has a cyber insurance policy with both first-party and third-party coverage. Which of the following actions should Sarah take first to address the situation? A. Immediately notify the insurance company of the incident and submit a claim for data breach coverage. B. Attempt to negotiate directly with the hackers to recover the stolen data. C. Wait until the attack is fully resolved before informing her customers. D. Perform a public relations campaign to apologize for the breach before contacting the insurance company. Answer: A. Immediately notify the insurance company of the incident and submit a claim for data breach coverage. Explanation: In the event of a data breach or cyber attack, the first step should be to notify the insurance company to initiate the claims process, as most policies require prompt reporting of incidents. This allows the insurer to assist with response and recovery efforts. In this case, Sarah has first-party coverage for data breach and should make the claim to help mitigate the financial impact. Negotiating with hackers, option B, or delaying communication, option C, could lead to additional legal and reputational risks. A public relations campaign, option D, should come after the necessary legal and insurance steps have been taken. Question 3. Which of the following factors is most likely to increase the premium of a cyber insurance policy during the underwriting process? A. A business that has implemented advanced cybersecurity measures, including multi-factor authentication, MFA, and encryption. B. A business operating in a high-risk industry such as healthcare, with sensitive customer data. C. A small business with fewer than 10 employees and limited online transactions. D. A business with a history of frequent cyber incidents but without implementing any cybersecurity improvements. Answer: B. A business operating in a high-risk industry such as healthcare with sensitive customer data. Explanation: Underwriters assess the risk associated with insuring a business based on various factors, including the industry type, the amount of sensitive data handled, and the business's cybersecurity posture. High-risk industries like healthcare, which handle sensitive health information protected under regulations like HIPAA, typically face higher premiums due to the potential for costly data breaches and regulatory fines. On the other hand, businesses with strong cybersecurity measures, option A, may see low premiums as these measures reduce risk. Small businesses, option C, or those with a history of cyber incidents but no cybersecurity improvements, option D, may also face higher premiums due to the higher likelihood of future claims. Question 4. Which of the following statements about cyber insurance exclusions is most accurate? A. Cyber insurance policies always exclude damages caused by acts of war, including cyber attacks initiated by foreign governments. B. Cyber insurance policies may exclude coverage for losses caused by unencrypted data or inadequate security measures. C. Cyber insurance policies do not typically exclude coverage for ransomware attacks, even if the business did not implement proper cybersecurity measures. D. Cyber insurance policies will always cover losses due to social engineering fraud, regardless of the business's level of cybersecurity. Answer: B. Cyber insurance policies may exclude coverage for losses caused by unencrypted data or inadequate security measures. Explanation: Cyber insurance policies may have exclusions related to inadequate security measures or unencrypted data. Insurers often require businesses to meet certain cybersecurity standards, such as encryption and multi-factor authentication, and failures to implement these measures can lead to exclusions in coverage. Acts of war, option A, and social engineering fraud, option D, are sometimes excluded but are not blanket exclusions. Ransomware attacks, option C, are typically covered, but the extent of coverage may depend on whether the insured had adequate security in place to prevent the attack. Question 5. What is the primary purpose of a cyber insurance policy's crisis management and public relations coverage? A. To cover the cost of repairing the insured's damaged computer systems after a cyber event. B. To pay for the legal costs associated with defending the insured against third-party lawsuits. C. To fund the cost of public relations efforts aimed at mitigating reputational damage following a cyber attack. D. To provide financial compensation for the insured's business interruption losses during a cyber event. Answer: C. To fund the cost of public relations efforts aimed at mitigating reputational damage following a cyber attack. Explanation: Crisis management and public relations coverage within a cyber insurance policy is designed to help businesses manage the reputational damage that may result from a cyber attack or data breach. This coverage typically includes the cost of hiring public relations professionals to manage communications, issue statements, and prevent further damage to the company's reputation. Option A refers to business interruption coverage, option B to liability coverage, and option D to business interruption losses, all of which are separate from crisis management coverage. Question 6. Scenario: Mr. Roberts operates the financial services company that stores sensitive client data. He just received a subpoena requesting the release of personal information related to a data breach. What coverage under his cyber insurance policy would likely assist him with the legal costs of this subpoena? A. Privacy liability coverage. B. Cyber extortion coverage. C. Media liability coverage. D. Network security liability coverage. Answer A. Privacy liability coverage. Explanation: Privacy liability coverage is designed to cover the legal costs associated with violations of privacy laws, including responding to subpoenas for the release of sensitive personal information. Since Mr. Roberts' company handles sensitive client data, this coverage would apply. Cyber extortion coverage, option B, addresses threats like ransomware. Media liability coverage, option C, involves issues like defamation. And network security liability coverage, option D, typically covers incidents related to breaches of network security but is less relevant to the legal costs of a subpoena. Question 7. Which of the following is most likely to be excluded from a cyber insurance policy? A. Costs associated with a business interruption caused by a cyber attack. B. Losses from a cyber attack that involve unencrypted personal data. C. Legal expenses related to defending against a third-party lawsuit for data breach. D. Payments to mitigate the threat of a ransomware attack. Answer: B. Losses from a cyber attack that involve unencrypted personal data. Explanation: Cyber insurance policies may exclude losses arising from unencrypted data, as insurers typically require businesses to implement basic cybersecurity measures such as encryption to reduce the risk of data breaches. Failing to do so may result in exclusions from coverage. Business interruption, option A. Legal expenses, option C, and payments to mitigate ransomware threats, option D, are generally covered provided the business has appropriate measures in place and complies with policy terms. Question 8. Which of the following factors is most likely to influence the underwriting process of a cyber insurance policy? A. The insured's location in a state with strong cybersecurity regulations. B. The size of the insured business, with larger businesses generally receiving low premiums. C. The insured's history of previous cyber incidents and the implementation of risk mitigation strategies. D. The amount of coverage the insured requests, as higher coverage amounts lead to low premiums. Answer: C. The insured's history of previous cyber incidents and the implementation of risk mitigation strategies. Explanation: Underwriters assess the risk of insuring a business by considering its history of cyber incidents and whether it has implemented adequate cybersecurity measures. A business with a poor track record of cyber incidents or inadequate risk mitigation may face higher premiums. Location, option A, and the size of the business, option B, are also considered, but the insured's proactive steps in managing cyber risk have a significant impact on premium costs. Option D is incorrect, as higher coverage amounts typically lead to higher premiums, not lower. Question 9. Which of the following statements is true regarding regulatory fines and penalties coverage under cyber insurance policy? A. It generally covers fines for violations of data protection laws, but only if the business intentionally violated the laws. B. It covers all regulatory fines and penalties related to any violation of cybersecurity laws, regardless of the insured's intent. C. It is typically excluded from most cyber insurance policies. D. It applies only to the fines imposed by U.S. federal agencies and not state regulators. Answer: C. It is typically excluded from most cyber insurance policies. Explanation: regulatory fines and penalties coverage is often excluded from many cyber insurance policies, as many insurers do not cover fines or penalties imposed by regulatory bodies, especially for violations of laws such as GDPR or CCPA. Some policies may offer limited coverage for regulatory fines, but they generally exclude fines resulting from intentional violations, option A, or violations of local laws, option D. Coverage for fines, option B, is rare and would likely be subject to very specific terms and conditions in the policy. Question 10. What is the primary function of a cyber risk rating model in cyber insurance underwriting? A. To assess the cybersecurity budget of the insured business. B. To evaluate the physical security measures of the insured business's location. C. To determine the level of cybersecurity risk the business poses based on various internal and external factors. D. To calculate the amount of liability coverage needed by the insured. Answer: C. To determine the level of cybersecurity risk the business poses based on various internal and external factors. Explanation: the cyber risk rating model is used to assess a business's cybersecurity posture, considering both internal factors such as the quality of its security practices and external factors such as the industry's vulnerability to attacks. This model helps underwriters evaluate the risk and determine appropriate policy terms and premiums. It does not focus on the business's budget, option A, physical security, option B, or directly calculate coverage needs, option D. Question 11. Which of the following is a key reason that cyber insurance policies often require businesses to implement specific cybersecurity practices, such as encryption and multi-factor authentication? A. To ensure the business can reduce cyber risk to zero. B. To reduce the insurer's potential payout in the event of a claim. C. To make the business eligible for low premiums. D. To ensure compliance with all federal regulations regarding data security. Answer: B. To reduce the insurer's potential payout in the event of a claim. Explanation: cyber insurance policies typically require businesses to implement basic cybersecurity practices such as encryption and multi-factor authentication to reduce the risk of a cyber event occurring or to limit the damage in case it happens. These measures help insurers mitigate their potential liability by encouraging insured businesses to adopt best practices, which can ultimately lead to fewer claims. While they may help lower premiums, option C, the primary reason is to reduce the insurer's potential exposure to large claims. Question 12. Scenario: the company experiences a breach where hackers steal customer credit card information. The company has cyber insurance with both data breach and notification coverage. Which of the following costs would most likely be covered under the company's policy? A. Costs to replace stolen credit cards for affected customers. B. Costs for the company's internal investigation into how the breach occurred. C. Fines imposed by the government due to the breach. D. Legal costs for lawsuits filed by customers over the breach. Answer: B. Costs for the company's internal investigation into how the breach occurred. Explanation: data breach coverage typically covers costs associated with the response to the breach, such as the internal investigation to determine the cause and extent of the breach. Notification coverage would cover the costs of notifying affected individuals, replacing stolen credit cards, option A, fines, option C, and legal defense costs, option D, may be covered under different parts of the policy but are not typically covered by data breach and notification coverage alone. Question 13. Which of the following is most likely to be excluded from a cyber insurance policy's coverage for social engineering fraud? A. Funds lost due to phishing emails that deceive employees into transferring money. B. Funds lost when an employee is impersonated over the phone to authorize a wire transfer. C. Losses from an employee inadvertently disclosing confidential information to a hacker. D. Money stolen through the use of fraudulent invoices sent via email. Answer: C. Losses from an employee inadvertently disclosing confidential information to a hacker. Explanation: Social engineering fraud coverage typically focuses on scams where a business is tricked into transferring funds or providing sensitive information such as phishing emails, option A, or fraudulent invoices, option D. However, losses resulting from employees inadvertently disclosing confidential information, option C, are often excluded as they may be categorized as internal errors or negligence, which are not covered under social engineering fraud policies. Question 14. What is the purpose of the retroactive date ECA cyber insurance policy? A. To specify the date from which cyber incidents will be covered, typically starting after the policy is issued. B. To establish a cutoff point beyond which claims related to pre-existing issues are not covered. C. To determine the maximum amount the insurer will pay for each claim. D. To set the deadline by which claims must be filed after a cyber incident occurs. Answer. B. To establish a cutoff point beyond which claims related to pre-existing issues are not covered. Explanation. The retroactive date ECA cyber insurance policy is used to establish a cutoff point for incidents that occurred before the policy was active. Claims arising from incidents that happened before the retroactive date are generally excluded from coverage, regardless of when the policy is triggered. This date is important for ensuring that the policy only covers incidents occurring after it is in force, excluding prior breaches or risks that existed before the policy's activation. Question 15. Which of the following factors would most likely lead to a cyber insurance policy's denial of coverage for a claim? A. The business had implemented industry-standard cybersecurity measures such as encryption and firewalls. B. The business experienced a cyber attack but did not notify the insurer within the required time frame. C. The business was using a cloud-based service provider for data storage and backup. D. The business's employees underwent regular cybersecurity training and awareness programs. Answer. B. The business experienced a cyber attack but did not notify the insurer within the required time frame. Explanation. Cyber insurance policies typically include a notification requirement, which specifies that the insured must inform the insurer of any cyber incidents within a specified period, often within 24 to 48 hours of discovery. Failing to notify the insurer within the required time frame can result in a denial of coverage. Compliance with cybersecurity practices, options A, C, and D, generally strengthens the claim but does not excuse the failure to notify the insurer in time. Question 16. Which of the following is typically covered under cyber insurance policies of business interruption coverage? A. Loss of revenue due to a data breach that causes a company's website to go offline. B. Costs of implementing additional security measures after a cyber event. C. Expenses related to restoring data lost in a cyber attack. D. Fines resulting from failure to comply with data protection regulations. Answer A. Loss of revenue due to a data breach that causes a company's website to go offline. Explanation. Business interruption coverage under a cyber insurance policy typically covers loss of revenue and operational disruptions caused by a cyber event, such as a website being taken offline after a data breach. It does not cover the cost of implementing additional security measures, option B, data restoration, option C, or fines for regulatory non-compliance, option D. Question 17. Which of the following best describes the moral hazard that insurers seek to avoid when underwriting a cyber insurance policy? A. The tendency for businesses to reduce their cybersecurity measures because they believe their insurance will cover the costs of a breach. B. The risk that an insured business will intentionally cause a cyber event to benefit from the insurance payout. C. The possibility that a business will claim for a loss that did not occur. D. The risk of fraudulent claims made by third parties as a result of a cyber attack. Answer A. The tendency for businesses to reduce their cybersecurity measures because they believe their insurance will cover the costs of a breach. Explanation. A moral hazard refers to the behavior change that may occur when a business is protected by insurance, leading them to reduce their efforts to prevent losses, believing the insurance will cover the costs. Insurers aim to prevent this by requiring businesses to implement cybersecurity measures and adhere to certain protocols, while fraudulent claims, option C, and intentional cyber events, option B, are concerns. They are not the primary focus of a moral hazard in cyber insurance. Question 18. Scenario. A company purchases cyber insurance with the goal of covering costs related to third-party data breaches. Which of the following best describes the type of coverage this policy provides? A. First-party coverage. B. Third-party liability coverage. C. Business interruption coverage. D. Crisis management coverage. Answer. B. Third-party liability coverage. Explanation. Third-party liability coverage in a cyber insurance policy protects a business from lawsuits or claims filed by customers, partners, or other entities whose data was breached or compromised in a cyber event. First-party coverage, option A, covers losses the business suffers directly, such as data recovery costs, while business interruption, option C, and crisis management, option D, focus on operational disruptions and reputation management, respectively. Question 19. Which of the following is typically excluded from coverage in a cyber insurance policy related to cyber extortion? A. Payments to hackers demanding ransom to prevent a cyber attack. B. Costs of hiring a third-party forensic team to investigate the breach. C. Costs to notify affected individuals of the data breach. D. Legal fees for defending against a lawsuit due to the breach. Answer A. Payments to hackers demanding ransom to prevent a cyber attack. Explanation. Cyber extortion coverage in a cyber insurance policy often excludes the actual payment of ransom to cyber criminals. Option A. While policies may cover the costs of forensic investigations, option B, notification, option C, and legal defense, option D, the payment of ransom is typically excluded due to the policy's focus on preventing future cyber attacks rather than incentivizing cyber criminals. Question 20. What does the term aggregate limit (ICA) cyber insurance policy refer to? A. The maximum amount an insurer will pay for any single cyber incident. B. The maximum amount the insured must pay out of pocket for a claim before insurance coverage kicks in. C. The total amount the insurer will pay for all claims during the policy period. D. The amount of money the insured must pay for incident response services. Answer. C. The total amount the insurer will pay for all claims during the policy period. Explanation. The aggregate limit refers to the total amount of coverage available for all claims made during the policy period. Once this limit is reached, the insurer is no longer responsible for paying additional claims. This differs from the per occurrence limit, which applies to each individual claim or incident. Question 21. Which of the following would likely be covered under a cyber insurance policy's network security coverage? A. Data loss due to employee negligence. B. Costs related to a ransomware attack that locks company files. C. Loss of revenue from a server failure unrelated to a cyber incident. D. Legal costs for defending against a class action lawsuit regarding a data breach. Answer. B. Costs related to a ransomware attack that locks company files. Explanation. Network security coverage in a cyber insurance policy typically covers losses resulting from cyber attacks that compromise the security of a business's network, such as ransomware attacks. Option B, that lock files or disrupt services. Employee negligence, option A, is generally not covered unless explicitly included, and server failures not caused by cyber events, option C, would fall outside the scope of coverage. Legal costs, option D, may be covered under a separate part of the policy, such as third-party liability coverage. Question 22. Scenario: a company experiences a data breach that exposes sensitive customer data. The company's cyber insurance policy includes coverage for notification costs. Which of the following would most likely be covered under the notification cost coverage? A. Legal fees associated with defending a class action lawsuit from affected customers. B. Costs related to providing credit monitoring services to affected customers. C. Cost of repairing damaged company hardware and software systems. D. Fines imposed by government agencies for failing to protect customer data. Answer. B. Costs related to providing credit monitoring services to affected customers. Explanation. Notification cost coverage typically covers expenses associated with informing affected individuals about a data breach. This includes providing services such as credit monitoring. Option B, it does not typically cover legal defense costs. Option A, hardware and software repairs. Option C, or government-imposed fines. Option D, as those would generally fall under other parts of the policy or be excluded. Question 23. What is the primary purpose of a breach coach in the context of a cyber insurance policy? A. To advise the insured on how to respond to cyber insurance claims. B. To guide the insured through the process of restoring lost data. C. To assist the insured in managing the public relations aspect of a data breach. D. To provide technical assistance for addressing the cause of the breach. Answer. C. To assist the insured in managing the public relations aspect of a data breach. Explanation: a breach coach is a professional, often provided through a cyber insurance policy, who helps the insured manage the response to a data breach from a public relations perspective. This includes advising on how to communicate with affected parties and the media, ensuring the business's reputation is properly managed during a breach. While they may assist in other aspects, such as technical support or claims management, their primary role is typically related to public relations. Option C. Question 24. Which of the following is an example of a first-party loss in a cyber insurance policy? A. Legal fees for defending against a lawsuit filed by a customer after data breach. B. Revenue lost due to a company's website being taken offline by a DDoS attack. C. Costs for notifying affected individuals about a data breach. D. Expenses for a third-party vendor to restore lost data following a breach. Answer: B. Revenue lost due to a company's website being taken offline by a DDoS attack. Explanation: a first-party loss refers to losses that directly affect the insured business itself. In this case, revenue lost due to a website being taken offline. Option B is a first-party loss. Legal fees. Option A. Notification costs. Option C. And data restoration expenses. Option D are typically considered third-party losses, as they involve costs related to claims or services provided to others, such as customers or vendors. Question 25. Which of the following is an example of a cyber liability claim that could be covered by a third-party liability provision in a cyber insurance policy? A. The company's IT department restores systems following a cyber attack. B. The company faces a lawsuit from a customer whose data was compromised in a breach. C. The company incurs costs to notify employees about a data breach. D. The company experiences revenue loss from an online store being temporarily offline. Answer: B. The company faces a lawsuit from a customer whose data was compromised in a breach. Explanation: third-party liability coverage in a cyber insurance policy protects the insured against claims made by third parties, such as customers or business partners. In this case, a lawsuit from a customer whose data was compromised in a breach. Option B is a typical third-party liability claim. Restoring systems. Option A. Notification costs. Option C. And revenue loss. Option D are first-party losses and would not be covered under third-party liability coverage. Question 26. Which of the following is generally excluded from a cyber insurance policy's coverage? A. Data breaches that occur due to a vendor's failure to secure their systems. B. Loss of revenue from a cyber attack that disrupts normal business operations. C. Costs for repairing physical hardware damaged during a cyber attack. D. Legal costs for defending against a claim for a data breach. Answer: C. Costs for repairing physical hardware damaged during a cyber attack. Explanation: cyber insurance policies typically cover losses related to digital assets, data, and third-party liabilities. However, physical damage to hardware caused by a cyber attack. Option C is often excluded, as it falls outside the scope of a policy designed to address cyber risks. Data breach costs. Option A. Business interruption. Option B. And legal defense costs. Option D may be covered under other provisions in the policy. Question 27. Which of the following describes the waiting period at a cyber insurance policy's business interruption coverage? A. The period during which the insured can file a claim after a cyber event occurs. B. The amount of time the insurer will take to investigate the claim before providing coverage. C. The amount of downtime or operational disruption required before the policy covers business interruption. D. The period during which the insurer will not cover any claims under the policy. Answer: C. The amount of downtime or operational disruption required before the policy covers business interruption. Explanation: the waiting period in business interruption coverage refers to the minimum amount of downtime or disruption in business operations that must occur before the policy will provide coverage for lost revenue or other operational impacts. This period is typically measured in hours or days. It is not related to filing a claim. Option A. The insurer's investigation. Option B. Or a complete exclusion from coverage. Option D. Question 20. Which of the following is an example of cyber extortion that could be covered by a cyber insurance policy? A. A hacker holds a company's data hostage and demands payment to release it. B. A company's website is taken down by a DDoS attack. C. A company's employee inadvertently shares sensitive data with an unauthorized party. D. A hacker impersonates a company's CEO to authorize fraudulent wire transfers. Answer A. A hacker holds a company's data hostage and demands payment to release it. Explanation. Cyber extortion involves a situation where a hacker or criminal demands payment from a company to prevent further damage, such as holding data hostage through ransomware attacks. Option A. While a DDoS attack, option B, can disrupt operations, it does not involve extortion. Employers. Option C. And social engineering fraud. Option D. Are different types of cyber incidents often covered under other parts of the policy. Question 29. What does a cyber insurance policy's data breach coverage typically include? A. Compensation for lost revenue due to a cyber attack. B. The cost of restoring damaged hardware systems. C. The cost of notifying affected individuals and providing credit monitoring services. D. Payments to hackers to prevent a cyber attack. Answer. C. The cost of notifying affected individuals and providing credit monitoring services. Explanation. Data breach coverage generally includes costs related to notifying individuals whose personal information was compromised and providing services such as credit monitoring. It does not typically cover lost revenue. Option A. Physical repairs. Option B. Or ransom payments. Option D, as those are usually addressed under other parts of the policy. Question 30. Which of the following is most likely to trigger a cyber insurance policy's policy renewal audit? A. A significant change in the company's cybersecurity practices. B. A new cyber attack that results in a large financial loss. C. A substantial increase in the company's revenue due to online sales. D. A policyholder's failure to file a claim within the policy's time limits. Answer A. A significant change in the company's cybersecurity practices. Explanation. A policy renewal audit often occurs when there is a significant change in the company's risk profile, such as an update or upgrade to its cybersecurity practices. Option A. Insurers will want to reassess the level of risk and adjust premiums accordingly. What changes in revenue? Option C. Or the occurrence of a cyber attack. Option B. May affect coverage in the future. They are not typical triggers for a renewal audit. Failure to file a claim on time. Option D. Would not typically lead to an audit.